Welcome to my daily review. You are looking at a daily chart of the Nasdaq. Oh, by the way, the daily review is March 27th, Wednesday, March 27th, 2024. And you can see the Nasdaq, had a real strong week last week as it bounced off its 21 and then pulled back the first two sessions of this week and, bounced off the 10 EMA today. So getting support at the moving averages. It was up 83 points or 0.51%, closed at 16,399.52. So rounded up at 16.4. Anyway, the volume was down slightly, 10% below the average daily volume, which we've seen low volume this week. These are the three sessions, all below the average daily volumes. A holiday week, there's no market action on Friday. It's closed for Holy Friday, and tomorrow will be the last day of the week, and then we'll get back at it on Monday, April 1st. I think we'll see a little different kind of market because we're seeing, a lot of rotation this week. And I'm going to talk about that in a minute. One thing I want to acknowledge, though, is that the Russell 2000 index has really made a sharp move here. Went from 1,921 to 2,115, then pulled back. And we thought, this thing's kind of trading with the rates, the higher, the 10-year yield, right? But it's kind of disengaged from that, trade. And it's trading, as the 10-year goes up, this thing's going up too. It's just a little undervalued compared to the other indexes. So it's good to see that the market spread out, and not only just the industrials and the large cap, but the smaller cap names are now getting some love. So that is great to see. I mentioned that that the Nasdaq was up, and it was a strange day. It was a strange day. And Apple was up today, and it's had a lot of bad news lately, but we just look at the price action and not really the news, because the market action precedes the news. But this one had this cup with handle, area, and then it just fell out of bed through its moving averages, trending lower. Today it made a little move up, but these moving averages tend to turn into resistance once you're below them. Like here, it pulled up to the moving average and got rejected and rejected. Serious rejection here every time. Now it ran up recently to the 21 and got rejected again. So today it's up against the 10, maybe to get through the 21. We'll see. But Apple has a lot of work to do. Today just seemed like a day where the if you ever played sports, if you're up, 40-0 in football near halftime, the other team scores a touchdown. It's like throwing them a bone or something. Or if you're a basketball player and you have like a big lead of like 50-20 at halftime, they make a couple 3-pointers, but these are like Hail Marys here, that they're just throwing these stocks a bone, rotating, taking money out of winning stocks. I'm going to show what MC stock charts tomorrow. I'm going to show a comparison chart of how leading stocks have performed this quarter. They're up a lot, and how they've suffered this week because they're rotating out of them. There's and then buying stuff like this, like Tesla, just maybe taking a shot here. It might go lower, maybe not. Maybe it's a good buy point here for Tesla. Just keeping an open mind. But anyway, I've got to get to the winners of the quarter, and Nvidia is being sold this week. After 11 straight weeks higher after this breakout from 500, it's down more than 4% this week. Just kind of like institutions get audited, like pension funds, like school pension funds, or like Ivy League schools, Notre Dame, Stanford. They have these large pension funds, a lot of the public school funds, and they meet with these fund managers every quarter, and they need to be in compliance. And if they're out of compliance, like have too much of one sector, they can lose their clients. So you sell stocks that you really like, and that's what you have to do to get in compliance. if the like one of the pension funds I sat on, it was 5%. You had 20 categories, couldn't be more than 5% in any one of them. And so if they were up 6, 7, 8%, they'd have to sell it to get under that 5% compliance. And I talk to these, representatives often, and they would say, "No, we love the stock. Just we had to sell it to get in compliance and buy something we don't like in defense or retail or telecom or something, some other staples or discretionary or some other area. We just sold and bought something else because we had to." And I think that's what's going on here with Nvidia. A little rebalancing at the end of the quarter, and no great damage. I showed you the weekly chart here. Like if you bought, at 500, before this big rip, and it comes down 4%, you're going, no big deal. And this is what I talk about with weak hands. People get offended when I say weak hands. Weak hands is your entry makes you weak. Like I bought Abercrombie and Fitch here at 120. Like I bought it when I should have. I could have held it easily during a pullback, but I bought it at 120. So when it started coming down, I had to sell it. So I was a weak hand there. It's not that I'm a weak person, or it's not a personal offense. It's just your position, your entry position makes you a weak hand. So if you bought, Nvidia recently here at 900, you have to get rid of it. You have to sell it because you can't allow a profit to turn into a loss. If you like it longer term, and if you have the guts to just, kind of hold on, it's doing nothing wrong. And I think this is the big winner from AI. And I'm not, telling anything and nobody doesn't know. Everybody wants to own this stock. And so that's why I continue to have it on my ready list. Is it's not, like I said, it's up 11 weeks, it's down, 1 week. Even if you're, a kindergartner could say, oh my gosh, this thing's in a clear uptrend, oh yeah, it's down 1 week, but that's not a trend. 1 week does not a trend make. So just hang in there. If you own it, like I was fortunate enough to buy it, on that January 9th day. So it's an easy hold for me, and I wouldn't even consider selling it until it, started, cratering below the moving averages. But it's fine here at 900. Like I say, this is more mechanical than anything else. It's not like these fund managers hate Nvidia and they want to get rid of it. It's just kind of mechanical trading. Anyway, that's enough for weak hands and enough sports references. I'm going to move on to MarVL. MarVL has not had a great quarter, and it was being bought up today. It was put on somebody's conviction list or something. There was some positive, I don't know, but it doesn't have the growth for me. MarVL, I had it on our ready list a while back, really shot up here, but it doesn't have the growth that I'm looking for, in a semiconductor name. If I'm going to buy a semiconductor, I'm going to want Nvidia or Broadcom or AMD. So speaking of AMD, this thing has pulled back. I believe I have it on the ready list. And it looks to me like it's just squatting there at the 50. And yeah, this week, it's kind of an oddball week, end of the quarter, but starting April, I would expect it to start finding support here and bouncing back towards that 200. I believe it's on our ready list for this week. If not, it should be, because I like that setup right there. And I did mention Broadcom. Broadcom's had a great quarter as well, pulling back 3 days to its these moving averages are converging, the 10 and the 21. So it pulled back to the 21 today, but that looks fine as well. And then the last one I wanted to show in this semiconductor fabless group is ARM Holdings. Definitely setting up in a base here. Yeah, it sliced its 21, and people are getting really upset. I showed you last night, I believe, that I would get concerned if it traded below that 115.49 area. But still, this thing it's got the not the tight flag, but it's got the pole and a flag. So but you definitely want to see it, hold its within its range there. And ARM is definitely getting people some panic mode, but yeah, I still think it's okay. But people just, every day they want their stocks to go up. Your stocks aren't going to go up every day, so deal with it. Okay, a couple of stocks that I want to go up every day. One of my largest holdings is SMCI, and this one was down. I was down $1.77 today. Whoopee! It was down a lot more than this. It traded down to its 21 and bounced pretty nice today. But you got to look at the weekly charts here. SMCI is up 5% this week. You know, it's similar to ARM, although I like it a lot better than ARM, where it's got this pole and it's flagging, and you know, it looks pretty good to me. SMCI, once again, it's up a lot this quarter, and you know, there's probably some mechanical selling there as well. But let's wait to see what happens next week and next month, as it just got into the S&P 500, and it's performing okay. I mean, it's holding its own there at you know, 1,000. Oh, and the other one is MU, like MU. And the thing I like about it is not the base, it's not the longer the base, the higher in space, that noise. It's this reversal in earnings here, where it had really bad earnings going down, 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 but the stock was going up. So the stock was sensing, you know, the earnings were going to improve, and they certainly have. And the estimates going forward are pretty strong. I think this is definitely a turnaround story. And when you see the AI revolution, you're starting to see it in the balance sheets with this stock and, you know, Nvidia. I could show you a bunch of others that are seeing better earnings, and, you know, earnings are the greatest driver of stock price appreciation. So I do like Micron, although I do have a 3-day rule. When it gaps up, usually 3 days is it. This is going on 5 days now, but you can see the big blue volume bars. That's not Aunt Sally buying that stock. All right, I mentioned rotation and, you know, the other team, you know, catching up and throwing a couple 3-pointers in at the end of the half. And the solar names are just, you know, this is a Jim Morrison trade here. They've been down so long that it looks like up. I mean, I can't get into in phase, you know, with these growth numbers or lack of growth numbers. This is just it isn't a stage one base, but when is it going to come out of it? I don't know. You know, but you know, they threw him a bone today. Nothing I can get excited about. The solar names, you know, if you own them, you know, you had a good day. You know, it was up nearly 10%. SEDG, Solar Edge, again, you know, up nearly 10%. You know, no rhyme or reason, just rotating out of the winners and buying the losers. That's basically what it is. And First Solar, and you know, this could continue tomorrow, even into next week, but eventually the winners are going to be the winners and the losers are going to be the losers here. So once again, up nearly 10%. First Solar, trying to get above the 200 SMA, but you know, I'm sorry, I just cannot get into that stuff. Anyway, I just had to acknowledge, you know, some of the winners on the day that are really losers. So it's just kind of that type of market. Oracle, this is a stock that I really like. Why do I like it, Marty? Well, because you can see the earnings here. Once again, the earnings line is just going straight due north here, and the stock is probably going to follow along, right? You can see it's in this stage 2 base. It had this stage 1 cup with handle. Now it's got this consolidation with a little, like a double bottom pattern, and it's pulled back here this week, which we like pullbacks, embrace the pullbacks. Yeah, it's down 1% or more. But to me, Oracle looks fantastic. I believe they actually even go ex-dividend here pretty soon. Not that you're going to buy Oracle for a dividend, but I like the earnings growth. I like the consolidation. I like the pullback. I like the fact that it had this prior big move. This is a big company, a big, you know, 344 billion market cap stock. So it's not going to fly, you know, like SMCI, but I could see it pushing away from this base above 130 level. Anyway, I've got to point out another winner here. This is MicroStrategy, not really a computer software stock. This is a Bitcoin play. You know, it's got a lot of buying here, a lot of strength. You know, pulled back a couple of days to the 21. That was it. And now it's making new highs near, you know, 2000. I mean, you want to buy that one way up there. You got a tiger by the tail there. That is not my style because, yeah, it went up to 19,999, whatever. To me, if I bought that, I'd be selling it as soon as it pulled back to the 10. So, you know, I can't buy it up here. Sorry. But if you own it, congratulations. You know, I'm not a big Bitcoin person, but, you know, obviously, you know, I could spot a rally, and this is a major rally here for MicroStrategy. Okay, let's get to a stock that I do like, that I'm interested in buying, that I've owned before. And this is CrowdStrike, which obviously has proven its ability to make big runs as it came out of this, you know, consolidation pattern here. Just ramped, you know, up to that 330 level. Then it went down with I think I want to say Palo Alto and Zscaler earnings went up with its earnings and now is just kind of flattened out. And this little, consolidation, flat base, shelf pattern, whatever you want to call it. I like it if it can trade above that level of 338.45. To me, this thing is trading tight and it's going to move higher. Eventually, when, I'm not going to say, but once again, look at the earnings line, just straight due north for CrowdStrike. So, you can see these moving averages converging here on the weekly. Yeah, that's the 8-week and the 30-week, I believe. Yeah. So CrowdStrike to me, once again, fundamentals. I'm a technical guy, but I like fundamentals. The stock's not going to go up because of the chart. It needs some earnings and sales growth, and CrowdStrike has them in spades. So I'm going to move on from the software group and go to something I like. I talked about leisure leisure stocks yesterday afternoon, and Domino's Pizza certainly fits that category. I don't know, I don't eat this type of food, but I do eat pizza, but not Domino's. I don't order pizza out and don't order it, to be delivered, but a lot of people do. And this stock is just on fire. It's on a heater, and you can see the moving averages trending higher. It jumped after earnings and pulled back to moving averages and traded higher. This is textbook stuff here, folks. Retail restaurant, top group. This is a top stock in a top group. And you can see that it broke out of this consolidation, just ramping higher. Yeah, Domino's, I'd just say congrats to the longs, or I'm not going to buy it way up there because I know I'd get shaken out on a pullback. I know myself. This is Sweet Green's got this David Ryan Ants indicator. Pull back one day and just had an inside day today, but very strong stock. Once again, I can't buy stuff way the heck up there because I'd get shaken out on a little pullback. So, but if you bought it here, on that breakout, $18 and you're golden. But up here, it's a little tougher. Contains more risk. The higher up you buy because of the shakeouts. They'll hunt your stops and stop you out. You've seen a lot of that this week. This is CAVA, IPO stock. Good to see the IPOs performing well. This one broke out, just riding its moving averages higher. Kelly Slater, surfer type stock. And then KRUS, this is one of those thin plays that I've put on my ready list because I like it. Above the 110, it's got some consolidation here. This thing does trade, a thin like a slice of sashimi, but it's trading higher. So, I like stocks that go higher. And to me, that looks fine still. So that's it for the retail restaurant stocks. I got to get to those power names. Eaton, surfing again. GE up, big today. Nice 3-something% move, bouncing off its moving average. This is why you get, embrace pullbacks, yeah, rather buy the pullback than, buy the rip, right? What's the other one besides GE? Power, another one that I like. It's on our leading stock list. Yeah, just making new highs every day. There's nothing to say there. Sterling Infrastructure, I have this on our ready list because it's forming the shelf type pattern. The moving averages are trending higher. You don't have to hold it very long to make money. And when the moving averages are moving like that, you can see it gapped out of that base. Now it's forming just like a little shelf pattern. So those power stocks are doing well. I got to move on to the drug stocks. Merck, drug approved today. They bought a company, and the name escapes me now. The drug escapes me, but it's for hypertension. Obviously, investors liked it, for a stock like Merck to move 5%. That's a nice breakout for Merck. There, look at that earnings line. No, thank you. But anyway, that's cup. Breakout, pullback, and now move higher this week. It's up 6% this week. So congrats to the Merck longs. Viking, this is one that, yesterday they had, a positive phase 1 trial and it ramped up. And there was people in the morning saying, it must have been 20 minutes after the news came out. How come this thing's not at 100 on this news? People expect their stocks to go, just blast off. Or at least go back to the secondary offering, which is $85. But give it time. I have a problem with them. Viking, they have 2 more compounds, 2 more readouts, and but they don't have really, they're not going to file an NDA for a while, so they're not going to have anything on market. You're basically holding this, hoping that it gets bought out because it has no earnings, it's got no sales, nada, nada, nada. So, I don't know what to say. I hold a little bit of it, but I'm not holding out a lot of hope. Um, and when you hold something that small, it doesn't have a real impact either way. If it blasted off to 200, it's not going to change my life or anything. Or if it went down to 20, it's not going to hurt me that bad because it's so small. And that's the problem with speculative biotech stocks. Hard to get big in them. Lilly, this is not speculative at all. This is just, and this is kind of the way it trades. And I have a lot of people, complaining that it's a bear wedge. It's rising, like it did here. This is what it does. This is what it does. It just trades real quietly, real tightly. Did it here, real quiet, real tight, and then it makes this big move, right? And then it goes sideways for a while, real tight. And then this is its character. Most stocks I would say, yeah, it's a bear wedge and it's probably going to crash and burn, but it's Lilly. I mean, I don't think it's going anywhere, but up. Yeah, it's they're selling everything they can make with their weight loss, franchise. So anyway, I'm going to move on because there were a lot of stocks moving higher today. The home builders are one group. Dreamfinder Homes, broke out of the base, pulled back to the 50, moving higher. The largest one in this group is DR Horton, still kind of consolidating in a base here, close to a base. That looks pretty good, up on light volume today, but you can see that volume falling off here as we get towards the end of the quarter. The other one was Pulte Homes, yeah, making a new high today. These stocks are showing strength. Toll Brothers, yeah, just very strong. The home builders, and there was a report out that prices just aren't going down, even though the rates are up. And I know the Fed would like them, to calm down a little bit. There's demand for homes, so and there's going to be, because we're underbuilt for a long, long time. Anyway, that's it for me. Thank you for watching. Except for in the honor of the great Steve Jobs, I have one more thing today. And that is the airline stocks. Yesterday, I talked about the leisure play with the hotels and the restaurants and the booking stocks. And today, I'm looking at these, stocks like United Airlines. Yeah, I mean, this is this is a nice waterfall and kind of a stage one base, but it's starting to break out above its, 200 here. And this little base here, this 44, it's breaking out of that. It pulled back here to its 50, now moving higher. So yeah, keep my eye on United Airlines. Delta is another one. This is a 30 billion market cap, so a little bigger. And this one's consolidating in a base too. So I'm just keeping my eye on them, just acknowledging it's up 3% today. Don't want to lose sight and get too hyper focused on AI stocks where you miss some of the other moves like in oil and gas and airlines and leisure and stuff like that. There's a lot of stocks doing well. ALK is Alaska. This is just a 5 billion market cap, but it once again above the above the 200, above the moving averages, and breaking out of this consolidation area. So yeah, I mean, just got to acknowledge it. That's all I'm doing, just acknowledging it, just observing. I wouldn't call these leading stocks, but these stocks are doing well. Even Southwest Airlines, which just can't get out of its own way, gapped lower, and today it was up 3%. Whoopee. Sorry if you own this one. It's been a real dog, but had to just point out, showing strength, up 2% this week. So this one is anyway, that's it for me. Thank you for watching. Tomorrow's the last day of the week, like I said. Probably, more of the same. Not a big deal. As we get into April and we get into earnings, we'll separate the wheat from the chaff, and those companies that are delivering their earnings will be rewarded, and the companies that are not will be sold off. One more thing, RH reported after the bell, up 10%. I know they missed on earnings, but they must have said something on the conference call where business is going to improve or something. But anyway, the Restoration Hardware is being restored after hours, 10% move. Anyway, thank you for watching at mcstockcharts.com. We never give up.